right, I think I'm ready to get started. So excited to have you all here. Super excited to have you guys learn about non-QM. Grateful for the opportunity to present to you all. My name is Eric Ferguson. I am a senior account executive here at Oaktree, and I've been with the company for coming up on 5 years now. So enjoyed my time here. I enjoyed non-QM. This is pretty much what I've done in the mortgage industry is working on non-QM loans. So happy to present this to you all. And I think it'll be a great opportunity for you all to learn about what we do here at Oaktree and non-QM in general, and how it can help you guys better serve your client base. So what we're going to go over today is some opportunities with non-QM, what you guys might be seeing out there, where the non-QM market of the industry is moving, and then I think will be most applicable for a lot of the loan officers and brokers watching this, common borrower profiles, and what your clientele will look like as you market non-QM or get referred non-QM, and what you can do with that. We'll also touch on some unique products that Oaktree offers, and new ones, ones that have been pretty popular as of late. And then property types that are commonly seen in non-QM to give you a reference point on how that can apply to non-QM. And then we will wrap it up with any questions you all might have. Feel free to send those in the chat, and then I will answer those, fire away as I go through this presentation, and I will answer those at the end. So feel free to send those, and we'll get those addressed at the end of this. So first item, market share and growth. We have some stats on this presentation. Non-QM is a growing part of the market in the mortgage industry, but what I would like to refer to in this situation is just personal experience. Being an account executive for about 5 years now, I recall, when I first started reaching out to brokers and loan officers across the U.S., how many of them were unfamiliar with non-QM, or really had an association with subprime that is not really accurate. And so they kind of shied away from non-QM. But fast forward to now, and even this past weekend, I went to the NAM conference in Vegas and speaking with loan officers from across the country. How many of them are truly seeing non-QM and closing non-QM production as of late? It's great to see. And it is a perfect time right now to get into non-QM, as this sector of the business is continuing to grow and has grown over the last few years. And really, it's an opportunity for you to help close more deals for your clients, give them strong financing options that a lot of them truly need. And it really sets you up for success. So a great time and a great opportunity for you guys to tune into this and learn more about this part of the business. So for opportunity in non-QM, I want to start off just by a general explanation of non-QM loans. They are loans that fall outside of CFPB's qualified mortgage standards. So deals that aren't falling into your conventional boxes like Fannie Mae, Freddie Mac. And that last bullet point on non-QM loans is really important because a lot of people have non-QM synonymous with subprime, and that's not really the case. We are still verifying borrowers' ability to repay, but we do it in alternative ways and with flexible guidelines that allow us to get more loans closed and get your clients the financing they need to pursue whatever goals they have in mind. So the products we have for your typical borrower, consumer, and I'll get into some of this in more detail in later slides, but it's alternative ways to qualify, bank statements, CPA prepared P&L, 1099 only. We can finance multiple citizenship types, whether it's non-permanent, I-10, foreign nationals, flexible with the credit event seasoning, 1 year on housing events is truly what we need. Expanded loan amounts and property types, which I'll get into more detail as we go on this one. And then products for investors. This is another common one, and one I really like to highlight, is that no income or employment, we're qualifying them with DSCR, still verifying that ability to repay, but it's through the cash flow of the subject property, and that covering the proposed payment of the property. Also, 5 to 10 has been very popular with us, 5 to 10 units, mixed use. We can also help out with the cross-collateralized and bridge loans, which I will get into more detail as we go through this. But great opportunities. I often hear loan officers referring non-QM out to other people that work that side of the business, but I don't see why you would do that. Really, if you can get these loans done, you have the products available, why not be the support and the resource for your clientele? Why pass that along to someone else? It's totally worth doing. These are good loans, and ones we can help you get done. So this is the most important, I think, slide of this presentation is the common borrower profile for non-QM, and the one I'll probably spend the most time on. No doubt, self-employed borrowers is probably the most common borrower we will see here at Oaktree. As far as qualifying with bank statements, these are business owners, entrepreneurs that likely have a good accountant or CPA that is good at their job, and they do not show enough on their taxes to qualify for conventional loans. Bank statements is a great option for them to qualify with competitive pricing and good 30-year fixed terms that sometimes those borrowers do not have access to based on their taxes. So no doubt entrepreneurs, business owners, most common. Another good one, realtors. We can qualify 1099 only. I see this all the time as a great marketing tool for loan officers and brokers I work with, reaching out to realtors who have their own properties that they want to finance, refinance, or purchase, acquire more. And 1099 only is a great option for them to qualify. Pretty simple, 1 year 1099, 1 year's previous 1099 with year-to-date verification of income. Very simple way to qualify those borrowers, along with rideshare drivers. Uber and Lyft is a common one I have seen where they're gig economy worker, even if it's part-time or full-time, but we can qualify them off that 1099 they're receiving. Investors, this is common clientele, and really I find to be an ideal borrower or client for non-QM due to DSCR. It is one of the most simple ways to qualify here at Oaktree. We are not looking at income or employment. Again, we are just qualifying off that subject property's ability to cash flow against the proposed payment that we plan on putting them in. Positives here, unlimited finance properties. We can go over 10. Every now and then we come across a borrower I like to call a unicorn, where they have 50 plus finance properties. They are looking to refinance out of a few of those properties or pull cash out to acquire more. And this is a great option for repeat business and multiple loans to do at one time. I've come across it many a time, and those are always great because it's the same borrower. It's really just the properties we are looking at, and as long as they cash flow, we can really help them achieve their goals. Another common profile is high net worth clientele. Everyone wants to be in this kind of bag, wants to find these kinds of clients and build those relationships. Asset depletion, great way to qualify. We're looking at the net qualified assets and dividing them by 60, as opposed to conventional financing. You just get way more income going through this non-QM asset depletion, along with the utilization. side of this. It's borrowers that have flush with assets. To be honest, you can proceed with that asset utilization without calculating a DTI. And a common phrase I've heard, is rich people are not spending their own money; they're borrowing it. That's how they stay rich. And so this asset depletion or utilization is a great route to qualify those borrowers that don't want to spend their own money. Um, Super jumbo, large loan amounts. We can go up to 5 million per our matrix, and I have seen us get exceptions up to about 7 million. So when you come across these larger loan amounts, you can't find financing with this, and you're looking to compete maybe with a bank on that financing, this is a great route to go, that super jumbo solution. Credit, this is another common non-QM borrower profile. They are a year out of Chapter 13, Chapter 7 bankruptcy, or have a foreclosure, could be mortgage lates. We can allow up to 0 by 60 by 12. In some cases, we can get an exception, depending on what that whole loan scenario looks like, and scores down to 620. Then various citizenship types commonly get approached about I-10 and foreign nationals. We can service all these clients. Non-permanent residents with certain visa classifications is another route. Again, these are all borrowers that I've had and heard in previous instances. Loan officers, brokers refer these to other partners of theirs. I don't see why you would pass up on it. If you have the product and the program that you can secure financing for that borrower, why pass that along? And so now we're going to touch on one of our new products, bridge loan. This has been pretty exciting. Got a lot of energy and excitement with this. Actually, at that conference, the NAM conference last weekend, a lot of people were interested in this one. Owner occupied investment, alt doc qualifying options. We can get up to 80% LTV on that new permanent, or 75% on that new permanent for investment. We can allow access up to 75% LTV on the departing primary and 60 LTV on the departing second or investment. The best way to explain our bridge is essentially we're going to do a cash out refinance on that departing residence, take first lien position. That property is going to be listed for sale and will have to sell within a year or 6 months if it's an investment. And we allow the borrower to tap into that equity, not wait for the sale of that home to take place and acquire, their dream home, their new primary, or an investment they're looking to capitalize on that has great cash flow. This is really a great program because we are not calculating that departing residence payment against the DTI. It's going to be a deferred interest, and they're not going to be making payments on that until that balloon comes due, whether it's 6 or 12 months, whether it's investment or a primary. So this is very exciting new program to us. Really excited to offer this to you guys. Think it's a great product for the market we are in, and allowing you guys to, again, offer more options to your borrowers to help them qualify for what they're looking for. And then our equity advantage. I would say this has been one of the most popular programs we've had in the last year or so. It's HELOC, or we have a closed-ended fixed rate second. On the HELOC, what has really got the excitement for this program has been that intro offer rate, and that is a limited time. We have still continuing to do it, and I've done it for the past few months now, but it's 3% off the fully indexed interest rate for the first 3 payments of the HELOC. So a great option just in general with these seconds to provide an option for your borrowers to access their equity without touching that 3% first that they have. And I know that's commonplace, and a lot of people have been seeing that, where they're stuck with equity and just don't want to lose out on that 3% first, it makes total sense. This is now an alternative documentation route to qualify those borrowers to access that equity. And again, we can go up to 500,000 on that HELOC and 750 on the HELOan. I have been able to get exceptions up to $1 million though. That is case by case. You know, we have to look at the scenarios, but you can bring this to me or your account executive if you already have one over here at Oaktree, and they will gladly see what they can do for you. Combined lien amounts up to 5 million is huge. So, you know, doing these on larger scale properties, great options to access that equity. Again, single family warrantable condos, 2 to 4 units. This is owner occupied and non-owner occupied options available. So really excited to have this and continue providing this kind of product. New to us too is qualifying P&L only. That has generated some excitement with this program. I know a lot of people are interested in that. And then 1099 only as well. So all dock ways to qualify at competitively priced second liens up to large loan amounts. It's really attractive. And again, if you guys have any questions, feel free to send them in the chat. I will address them at the end of this and get those questions answered. So some property types that come along with non-QM is going to be 5 to 10 unit. You know, this is kind of a niche bucket where it's too small for commercial lenders, too large for the conventional financing. This has been a popular property type for us as of late. We've had some really aggressive pricing in that 5 to 10 unit band. Again, qualifying DSCR. This is a professional investor program, so no income or employment needed. Some investor experience comes with this. But I love the 5 to 10 because I have hardly have ever had any issues with the cash flow on these properties. So it is a great option for serious investors because they care about cash flow. That is what I have seen out of the loans I have done in that 5 to 10 unit bucket. 2 to 8 unit mixed use, again, catered to the investor. These are great cash flow properties. Non-warrantable condos come across these often. You know, if you don't have an outlet for non-warrantable, why miss out on that deal? It is a great, you know, opportunity for you to either garner more business or save relationships that you're working through. Condotels, another one that pops up often. This is done quite a few of these and had great success with condotels and actually made some great relationships with our ability to offer condotel financing. 1 to 4 units. I have this one included on this slide. Obviously, this is, you know, something you can find in QM financing, but our 1 to 4 unit pricing is very aggressive and very competitive to conventional financing. So if you ever want to take a look at 1 to 4 unit, price it with us, you would be surprised with how aggressive we are on that pricing. And then modular homes is another one unique property type that we can help you finance. One thing I want to touch on this program details down here that is commonplace and what I deal with day to day is short-term and long-term financing or short-term and long-term rental income going DSCR. Yes, we have the ability to qualify with short-term rents, Airbnb ledgers, or AirDNA reports. We have ways to get you financing on that short-term rental or long-term rental. Either way is a great way to qualify. Short-term rentals, oftentimes ratio or cash flow better, and that's been very popular in the last few years. And then the expanded eligibility, just as far as, you know, unlimited finance properties is a big thing. And our ability to get exceptions done, which I'll touch on a little later, but it's the flexibility non-QM provides that makes it a great product and program for a lot of borrowers in this space. Another item, obviously the bridge we had touched on, but cross-collateralized loan options available as well, huge with investors if you have that kind of clientele or you're trying to bring them on. And so, yeah, we make exceptions. This is probably one thing I think Oaktree prides itself on. I pride myself on as an account executive here. Whether it is vetting a file up front when we know there's an issue, something that does not meet our guidelines. Pride myself on, addressing that upfront with you as the loan officer or broker. So you're on the same page with where Oaktree is at. And then working to make that exception, working to get that loan done. When you guys bring us deals, our goal is to get loans closed. We always strive to get loans closed. So if you come across something upfront that just does not meet our guidelines after communicating with your account executive here or we want to work to get that done. So we have a new system that we use to request exceptions that I think has made us even more efficient in getting exceptions done. And so if you do come across something that does not fit our guides, or if you have already brought your loan to us and it is in process, you have an issue that arises, it happens. It's our job to work to get that loan closed. So we have no issue working through that. And obviously case by case, every scenario is different. But if it's something that makes sense, we're going to work to get that done. And so we make a lot of exceptions here, happens all the time. So if you come across it or have questions on it, reach out to your account executive, reach out to me. We're happy to see how we can make that work for you. And then a plug to our marketing team who created this wonderful presentation and also helped facilitate this presentation, custom marketing pieces. So if you guys are approved with us here at Oaktree, you can reach out to your account executive or our marketing team, and they can help you create marketing pieces that directly you can label with your company's information or your information, is specifically catered to non-QM borrowers in that clientele. You can share it with realtors, clients themselves, whatever you need, but custom marketing is a huge help, huge source of a way to drive in business, especially in the non-QM space. And that is it. So I will take a look at these questions. I appreciate all of you guys for joining me on this presentation. Pleasure to have the opportunity to speak with you all about this. Really looking forward to any questions or scenarios that we can help you out with. So if you have anything, need anything, please don't hesitate to reach out to me. My contact information is in the bottom right here, and we will also get you guys copies of this flyer and some information on the rest of the products we offer. If there's anything we can help you out with non-QM, please don't hesitate to reach out to us. We are happy to help you guys out. Happy to get your loans closed.